Hey, Bulls and Bears, welcome. It is May 1st, 2023. Welcome back to another episode, another report of financial economic news. Bulls and Bears, let's talk about what's happening. Now, first of all, is it just me or did April fly by? April was gone in a flash, and here we are now in May, and we're just 2 months away until the middle of the year. So in a couple months, we'll be halfway through the year 2023. And as expected, 2023 is shaping up to be, is going to be one of the worst years. I think at the end of 2023, we're going to look back and we're going to see the numbers. One of the worst years ever. We've already seen the magnitude of the bank failures that have happened. We've got First Republic Bank basically looking for a buyer right now. It's intervention here from financial regulators. Well, let's talk about the bankruptcies here in 2023 so far. It's already one of the worst years. So me saying it's going to be one of the worst years, it's already been one of the worst years for bankruptcies, for bank failures, one of the worst years. But we're on pace to be the worst year in the history of the United States. And this is worse than 2008 financial crisis as far as the numbers of bankruptcies. In the first 4 months of this year, we just got done with April, there are 70 major bankruptcies already in the first 4 months. Liquidation sales are on, including Bed Bath & Beyond, but I've got a chart here that goes all the way back decades, and right now, 2023 is already the third largest number of bankruptcies, and we're only 4 months into the year. The worst was 2009 with 118. So in the entire year of 2009, we only saw 118 bankruptcies. The first 4 months of 2023 were already at 70. So we're the third worst right now. The second worst was 2020 with 71 bankruptcies. We reported on that all through 2020 with the health crisis and the everything shut down. It was a bad year, but it was still only 71. This year we're already at 70. We're only 4 months into the year. It's going to be, we're about ready to witness economic financial turmoil history this year in 2023. Now, will we be safe from this? Well, a lot of people are losing their jobs, obviously. You've got to prepare for the worst. We try to talk about preparing and preparation here. I wouldn't call myself a prepper, but, when you, in the sense where you see these other channels, they're talking about survival mechanisms and things like that. But when you think about it, we're all preppers, right? Every day we prepare for something, whether you're packing a lunch so you're not hungry at work that day, whether you're filling up your tank, you're preparing not to run out of gas, or you're preparing in many different ways. So how far do you want to take it, right? So we're all preparing for something. And, this year, how do we prepare for what's coming with all these bankruptcies? Well, prepare to lose your job. And I hate to sound like a negative person. My wife always says, you're negative. You're assuming the worst is going to happen. It's not so much assuming the worst is going to happen. It's being ready, though, if it does happen, right? And I'm not as prepared as many people that I watch here, even people here on YouTube. Many of them are way more prepared than I am as far as surviving, what's going to be coming here. Well, let's get into some information today. I think it's going to really be relatable to what I think all of us are trying to do. We're all trying to figure out how to navigate this, where to invest. Are you going to invest? A lot of people don't trust the platforms right now, not only the banks, but the investment platforms. What if we see a Robinhood fail? What if we see an E-Trade fail? And will the people get their money? From those, we know that some investment accounts are not FDIC insured. And we know that even banks that are FDIC insured, the FDIC only has a fraction of the total amount of deposits that's in the system. So they're trying to insure, I believe, about 18 trillion with 100 and something billion dollars. So we know that FDIC doesn't have enough to cover things. That's why we saw the Fed come in with these emergency loans and emergency rescuing of a lot of depositors for the bank failures that we saw at the beginning of the year. So it's going to be newly printed debt, so to speak, or rescue money. But here's something here for U.S. households. Here's what people are trying to do to spend less. Cash use rises as households try to cope with high inflation. Now, roughly 3 in 5 cash users said using physical money makes them spend less. Yeah, it's really easy to run up debt when you're just signing a loan document or when you're swiping a card. But when you have to take those dollars or those bills, whatever, 20, 50s, 100s, out of your wallet and set them down on the table or hand them over, it's a whole different ball game. Um, the use of cash right now is small compared to the total number of transactions, or based on the total number of transactions. It's very small, but it's been growing somewhat. And the reasoning behind that is people are trying to spend less and therefore using cash. Well, pretty soon it's going to be no cash. If the big banks get their way, it's going to be completely cashless. And a lot of skeptics out there of the cashless system are saying that's going to be a whole new level of monitoring and control. Once cash is completely eliminated. Now, I don't think we're going to get there that quickly. They're going to try to introduce completely digital currency here in the very near future. In fact, this year. But as far as phasing out cash, I don't think that's going to happen as quickly as some think, just because so many people depend on cash. Imagine all the places that you go that accept only cash. I mean, you may not go to a lot of those places, but I do, and I think there's still a lot of people out there that do. When you look at the flea markets, the yard sales, um, the roadside fruit stands, fruit and vegetable stands. I actually get my local honey from a roadside stand on the way to one of my kids' schools. There's this seller that sets up there. They have fruits, vegetables, lots of oranges, and honey. And, that's cash. So if we go to all digital, a lot of those sellers are going to just go away because they're not going to be able to have a credit card machine hooked up into the grid, on the side of the road somewhere or at the flea market or your yard sale. So maybe you can pay through your phone and use Cash App or something like that. But there's still a lot of cash transactions out there happening. There's also the argument for going cashless is that they'll be more easily able to stop criminal activity. Now that's what they're going to try to use to sell that. But to punish the criminals, you don't want to take away good people that are just trying to buy some fruit on the side of the road, for example. So we're going to see how that goes. It's going to be very interesting. I know I say that word a lot, but 2023 is not only going to be the worst financial year for the banking crisis, the bankruptcies, and I think layoffs are going to continue to increase, and we're going to see even the fake number, the unemployment number, we're going to see that rise because even fake numbers that are manipulated ultimately still show movement even after the manipulation is factored in. Another thing that we need to pay attention to and think about here is the commercial real estate crash. I mean, it's approaching a crash. In some cities, it definitely is a crash. San Francisco, we have commercial buildings going for 50% or more on sale. Basically, that's a crash when something is 50% off. But Charlie Munger is out there saying that U.S. banks are full of bad commercial loans. Full of bad commercial loans. This started back in 2020 again with the work at home craze, not just a craze, but a lot of times it was fear and a must because many offices closed. You had to work at home. A lot of companies kept some of their workers at home, and a lot of companies kept all their workers at home. They found out it was more cost effective for the company not to pay this enormous lease. And I know companies, and I worked for companies that have did the work for home thing, and it's very financially rewarding if you know how to do it. Now, in some cases, where you have to keep a really close eye on your employees, then it's not worth it because then the work tends to drop off without certain types of monitoring in place when people are in the office. But now with the type of work that a lot of people do, which is phone work, computer work, employees can be monitored even when they work remotely. So it's a big money saver for a lot of companies. But yes, the banks are full of bad commercial loans, and they're also full of bad consumer loans, and they're full of bad credit card uh, limits or credit card debt that's not going to be paid back. Look at the student loans. they're not getting paid back. Maybe they'll be forgiven, and maybe the money will be given back to the lenders. But Charlie Munger is just one of the many people out there, warning about this here. Charlie Munger has warned of brewing storm in U.S. commercial property market, with American banks, quote, full of what are bad loans as property prices fall. Now, as far as commercial real estate, Goldman Sachs is out there saying that commercial real estate is headed for something much worse than 2008. So we already have retail bankruptcies that are on pace to be the worst year ever. 70 already. We're 1/3 of the way through the year approximately. So we're going to be at about 210 if this continues at this pace, and it may even accelerate. It may be even worse than 210. We'll have to see how it goes. All right, so we're going to keep on top of everything here for you, everybody. Thanks for watching this here. Please give a like, subscribe, come back to this channel, and we're going to get through this together. Big love. Keep stacking. Bye for now. Peace.